Welcome back. Retail has been selling XRP for 6 straight months, the longest losing streak since 2014. The Fear and Greed Index has sat at 12 out of 100 for 49 consecutive days. Meanwhile, the largest wallets in this market have been buying more than 11 million XRP per day. That accumulation pace hit a 10-month high on April 6th. Then on April 9th, Treasury Secretary Scott Bessent, the White House Council of Economic Advisors, and Coinbase CEO Brian Armstrong all publicly endorsed the Clarity Act on the same day. XRP is at $1.36. The price barely moved. That disconnect is what we are breaking down today. So let's break it all down. The Clarity Act, formerly the Digital Asset Market Structure and Investor Protection Act, would convert XRP's commodity classification from an administrative opinion into permanent federal law. Right now, the classification is an interpretive release from the SEC and CFTC dated March 17th. Any future administration can reverse it. Banks and asset managers running pension and insurance capital will not commit at scale to an opinion that can be undone with a phone call. The act makes it statute. That is the entire mechanism behind the institutional bull case. Here is what happened on April 8th and 9th specifically. The White House Council of Economic Advisors published a formal report. A full ban on passive stablecoin yield would cost consumers $800 million per year while doing almost nothing to protect bank deposits. That finding eliminated the last major policy objection blocking the bill. Treasury Secretary Bessent posted publicly the following day, calling on the Senate Banking Committee to schedule the markup immediately. Hours later, Coinbase CEO Brian Armstrong endorsed the bill and thanked Bessent personally, ending 2 consecutive rejections from the largest U.S. crypto exchange. As of April 9th, the Clarity Act has no remaining major industry opponent. Legislative status: the bill passed the House 294 to 134. The Senate Agriculture Committee cleared its version on January 29th. What remains is the Senate Banking Committee markup, chaired by Senator Tim Scott. Senator Cynthia Lummis confirmed at the Chamber of Digital Commerce Blockchain Summit that the DeFi provisions, the final disputed item, are resolved. Senator Bernie Moreno: if the bill does not reach the full Senate floor by May, midterm dynamics shelve it for the rest of 2026. Galaxy Research analyst Alex Thorne: only 18 working weeks remain before the October midterm recess. Each week of delay now makes 2026 passage structurally implausible. Ripple CEO Brad Garlinghouse shifted his expected signing timeline from end of April to end of May. The Senate returned from Easter recess on April 13th. Okay, let's move from narrative to numbers. In the week ending April 7th, XRP led all crypto assets globally in exchange-traded product inflows, $120 million, more than half the entire market's weekly total of $224 million. On April 7th specifically, Bitcoin ETFs bled $159 million. Ethereum ETFs minus $64 million. Solana ETFs minus $15 million. XRP ETFs plus $3.3 million. On the day every major asset posted outflows, XRP was the only one with positive institutional flows. On-chain data tells the same story. CryptoQuant's whale flow 30-day moving average hit a 10-month high on April 6th. Large wallets added more than 11 million XRP per day over the past month, roughly $15 million in daily accumulation at the current price. Exchange reserves declined in parallel, shrinking the supply available to be sold at current prices. Standard Chartered analyst Jeffrey Kendrick: 2026 year-end target $2.80, 2028 target $12.60. 25% of institutional fund managers surveyed plan to add XRP this year, the highest stated allocation intent outside Bitcoin and Ethereum. Polymarket: 63 to 66% probability of Clarity Act passage, In 2026, Brad Garlinghouse 80%. Here's where I play devil's advocate because your money deserves more than confirmation bias. Before you go all in on this narrative, you need to see what's on the other side of the ledger. But pay attention to these next 3 data points. They explain why the price is not reflecting any of this yet. First, March 2026 was the first calendar month of net outflows in XRP ETF history, $31 million out. Total US XRP ETF assets under management fell from $1.24 billion in January to $947 million now. 7 ETFs launched simultaneously in November 25 instead of sequentially, fragmenting demand across competing products and preventing the momentum concentration that Bitcoin ETFs built. Second, 60% of XRP's circulating supply, approximately 37 billion tokens, was purchased near $1.44. Today's price is $1.36. Every push toward $1.40 to $1.45 triggers break-even selling from that cohort, documented on-chain, structural, not random. Third, the $120 million in global weekly inflows came almost entirely from Switzerland, which alone directed $157 million into Swiss-listed XRP products. The 5 US-listed XRP ETFs have had near-zero daily flows for 2 consecutive weeks. The domestic institutional capital required for a structural breakout has not arrived. If you're still with me at this point, good, because this last part is the reason to watch. Here's the part most bullish channels conveniently skip. The macro. Here's the part where reality walks in and punches the bull case in the face. The Federal Reserve holds rates at 3.5% to 3.75%, the highest sustained level in 15 years. 5-year U.S. Treasuries currently yield above 4.5% with zero default risk. Every dollar earning that yield is a dollar not allocated to XRP. The Fed meets April 28th and 29th. No cut is priced in. The reason is oil. The Iran conflict in late February disrupted the Strait of Hormuz, the waterway through which roughly 20% of global oil supply transits. Oil surged above $100 per barrel. That drove inflation higher at the worst possible moment for rate cut expectations. Oil has pulled back slightly following a 2-week ceasefire. The inflation damage to the Fed's calculus was already done before the ceasefire began. The Fed will not move until the inflation data shows a sustained reversal, and the counter-argument isn't speculation, it is in the data. These are the numbers the institutions are looking at right now. April is historically XRP's strongest calendar month, average return of 24.8% over the past decade. Historical data from disruption banking shows XRP ETFs have drawn over $1.3 billion in cumulative inflows since their U.S. debut. The XRP ledger processed 4.49 million daily transactions on April 4th. The Fear and Greed Index historical data. Readings below 15 have preceded positive 30-day returns 78% of the time. Fundamentals set the destination. Macro sets the timing. The XRP ledger recorded 4.49 million daily transactions on April 4th. Argentina's state oil company YPF tokenized $800 million in assets on the XRPL this year. SBI Holdings in Japan issued a 10 billion yen bond, approximately $64 million, paying rewards directly in XRP. First instrument of its kind from a major Japanese financial institution. Japan's Financial Services Agency recognizes XRP across 20 JVCEA member exchanges, the third most widely adopted digital asset in Japan's regulated ecosystem behind Bitcoin and Ethereum. Ripple launched digital asset accounts and a unified treasury function in April targeting the $13 trillion corporate payments market. Ripple minted 2 million new RLUSD tokens on Ethereum on April 9th for institutional liquidity management. Let me show you the other side, because you deserve the complete picture. What's standing between XRP and $2? 3 levels, 3 different stories. Resistance 1, $1.40 settings, the 50-day exponential moving average. XRP has tested and been rejected at this level multiple times since late March. A breakout on below average volume is a false signal. Watch the volume on any test. Resistance 2, $1.45. 60% of circulating supply, 37 billion tokens, was purchased near this price. This level triggers break-even selling from millions of wallets simultaneously. It is behavioral resistance backed by blockchain data, not a technical indicator. It has rejected every recovery attempt in 2026. Resistance 3, $1.60. XRP touched this level on March 17th when the commodity classification published. Sold back within hours. A daily close above 160 is the first data point confirming the 6-month range has structurally ended. So to recap, whale accumulation is at a 10-month record. Treasury Secretary Bessent, the White House CEA, and Coinbase CEO Armstrong all endorsed the Clarity Act on April 9th. Now let's talk about the force that's actually controlling all of this. Time to zoom back in, because there are 4 very specific things happening in the next few weeks. Signal 1, Senate Banking Committee markup date. A confirmed hearing date from Senator Tim Scott's office would begin to price in what Standard Chartered's Jeffrey Kendrick projects as $4 to $8 billion in additional ETF inflows on approval. The announcement alone, before any vote, has historically moved assets in crypto markets. Watch the committee calendar daily starting April 14th. Signal 2, US XRP ETF daily flows. The 5 U.S.-listed funds, Bitwise Canary, Franklin Templeton, Grayscale, 21 shares, have been at near zero flows for 2 weeks. Watch the CoinShares Monday report. 5 or more consecutive days of positive U.S. flows would indicate a structural shift in domestic institutional positioning, not a one-day bounce. Signal 3, Bitcoin above $73,000. XRP has historically lagged Bitcoin by 2 to 4 days. A sustained Bitcoin hold above $73,000, confirmed by volume, would likely pull XRP through the 140 exponential moving average with conviction. Signal 4, Fed language on April 29th. The rate decision is a hold. This is already priced in. What is not priced in is any language acknowledging inflation is moderating or suggesting cuts are appropriate in coming meetings. A single sentence shift in Fed language moves risk assets within minutes of publication. Bull case. Markup advances in the last 2 weeks of April. U.S. flows turn positive. Bitcoin holds above $70,000. Kendrick's year-end target, $2.80. FX Empire projects $1.65 to $1.80 on markup confirmation alone. Poly market at 66% and rising. Bear case. Markup postponed past May. Bitcoin slides below 65,000. Strait of Hormuz disruption resumes. Analysts at 24/7 Wall Street, 82 cents if the 128 support breaks. Both scenarios are specific. Both are documented. The next 2 weeks determine which one runs. You don't need to guess. You just need to watch these signals. XRP is at $1.36 today, down 63% from its July 2025 peak. 6 consecutive monthly losses, a streak this asset has not posted since 2014. Whale accumulation at a 10-month high. Coinbase, the U.S. Treasury, and the White House all endorsed the Clarity Act on a single day. Senate markup window, the last 2 weeks of April, I will be tracking the committee calendar, US ETF daily flow data, and Fed statement language every day on this channel. Tomorrow, the Senate is in session. First read on whether the Clarity Act markup has a confirmed date. Do not miss it, the data doesn't lie, and now you know how to read it. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.